Evolution of excess duty in India from Central Excise to GST. The Central Excise Act of 1944 was a landmark legislation designed to consolidate and streamline the imposition of central excise duties on goods manufactured within India. These duties levied under Section 3 of the Act were a significant source of revenue for the central government. However, the landscape of indirect taxation in India underwent a dramatic transformation with the introduction of Goods and Service Tax (GST) in 2017. This comprehensive reform led to the repeal of Central Excise Act except for certain goods listed in 7th Schedule of Constitution. The key distinction between excise duty and GST lies in their scope and application. The excise duty was charged on the production of goods levied at the time of their removal, while GST is levied on the supply of goods and services. With the implementation of GST, the central government's role in collecting excise duty shifted to collecting central GST, a component of broader GST framework. Currently, the Central Board of Indirect Taxes and Customs (CBIC) is seeking feedback from stakeholders on a draft Central Excise Bill 2024. This initiative suggests a potential revival or reimagining of central excise system, potentially addressing specific areas or goods not covered under the existing GST regime. The evolution of India's indirect tax system from central excise to GST demonstrates a commitment to streamlining tax administration and creating a more unified and efficient system for revenue generation. The ongoing dialogue regarding the Central Excise Bill 2024 highlights the dynamic nature of this process and government's willingness to consider further refinements to ensure a robust and equitable tax regime.